Good afternoon and welcome to another Market Matters video update. My name's Harry Watt and we've got James here today again to chat through what's going on with markets. It's a busy week this week, reporting season's kicked off. The market's ripped higher again today. What's your take there? What are your thoughts on the market around here? About 6,100. Yeah.
It's pretty surprising to be at 6,100. If you think of the backdrop, the last 3 days we've put on nearly 200 points. Obviously, you made mention of reporting season. I don't think it's really around what we're seeing in terms of reporting results. I think it's around market positioning going into it. I'll put my hand up and say we're more negative the market leading into reporting season. I thought we'd have a shorter term pullback. That started to play out. Then we got the recommendations coming out of the Royal Commission. That got ignited the banking space, and the banking space is such an influential sector in the market. To back that up, we then had the RBA come out and suggest that they were now having or less of a tightening bias. So Philip Lowe, the governor there, talked about the more downbeat about the Australian economy. So if you think about lower rates potentially, they're going to cut rates if they need to. That's supportive. It looked to me like there were some large portfolios getting set in Australia, so you could see it in the futures markets in the last couple of days, this morning in particular, and 2 days as well. You could see it in the futures market. So look, I think the market to me has run really, really hot in a really, really short amount of time. One's got a question, do you be on the sell side here? It's been driven mainly obviously by the banks, but also the resources that have got the tailwind from what's happened in the iron ore price.
Of course. So the banks you made good mention of there, they had the boost from the Royal Commission on Monday night, but CBA's result looked a little soft there. Where do you think they go from here?
Yeah, the market got a boost, as you said, from the Royal Commission recommendations. They were probably lighter than what the market perhaps had envisaged. I don't think that the short thesis on the banks is all around housing. The softness in the Australian economy. And if we think about what Philip Lowe said yesterday, we're still talking about the softness in the economy. The economic data that we've seen has been soft. So I don't think that short thesis on the banks is gone at this stage. We own banks, we're overweight the sector, we like them, we think they're relative value here. But to have 7% rallies in a day and go on with it, I think that's well and truly over the top. I think it's a degree of short covering that's played out. I wrote about Westpac being, going from sort of 40 million shares short sold in October up to about 70 odd million as of a couple of days ago. So we are starting to see some short covering. The CBA result, soft underbelly, so there's no earnings growth coming out of the banks. I think they're priced for no earnings growth at this point in time. Really good cost control, so they're stripping costs out pretty aggressively. So they're doing what they can in a pretty tough operating environment. Margins are coming under a bit of pressure. Funding costs have been going up, so that's an aspect that we're still considering. So look, it was an okay result. It's priced for an okay result, and I think what we're seeing now is short covering at this point in time, Harry.
The other side of the bell that's been helping this market rally has got to be resources. A lot of stuff coming out of Brazil with the Vale dam issue. They've run pretty hot. Rio's hit now a 10-year high. What do you take on Rio and BHP and a few of the other resource names? Yeah,
we sold Rio $89. It's a bit higher than that now. We're happy to take a good profit on the back of that. As you may mention, it's obviously around this restriction of potential supply in the iron ore market. The iron ore price has rallied from 60s to 90s. That's a very, in US dollar terms, I should say, that's a massive move in anyone's language. The concern now is how long will that supply restriction last, and what consequences will that have on Vale as a company and their ongoing production into the future. So it's all a bit up in the air at the moment, but we've also had some pretty good tailwinds in other commodities. So nickel's been on a tear, so that's helped our position in Western areas. We don't own it, but Iluka has started to really perform pretty strongly. So look, money's going into what I thought would play out post Royal Commission would have been a recycling of some money out of the hot resources area into the banks. We're seeing them both be really strong. So that implies to me there's a lot of cash on the sidelines. There's a lot of cash finding its way into the market, and potentially some overseas money, given that one of the big headwinds, our banking space, concerns that there might have been some major structural changes to happen there. that hasn't eventuated. So, look, the market's been surprisingly hot for me, Harry. I think it's run too hard, too fast. I wouldn't be a buyer up here. But again, I think the banks have put in a low now, and will be a buyer of the next meaningful pullback in the market.
All right, we've seen a few names report. Clydesdale's out today, and that's pretty strong. IDP Education as well, pretty strong. Anything you're looking at in this reporting season that we should keep an eye on?
Yeah, Downer was another one that I thought was a good result today. They upped guidance. There was probably the headline numbers weren't the headline numbers overshot what the actual number was because they had a slight tweak in the composition of their business. So AGL Energy was one that came out today. So really good half numbers, but their guidance was a little bit soft. So I don't think it's, as I said before, I don't think it's the fact that we're getting really good reporting numbers from companies here. The market was just really bearish, really negative going into reporting. It hasn't been as bad as perhaps feared. It's only early stages, but it hasn't been as bad as perhaps feared. And we're getting strong buying in areas. The other area of the market that's getting bought is the dogs. So things that have been under pressure. You mentioned Clydesdale. Less bad news. It is being bought pretty aggressive. It was up 14% in the UK. It's up a similar amount in our market today. So Janus Henderson is up 5% today. So I wrote about dogs, potentially adding a few dogs to the portfolio. We bought ResMed into weakness. That's having a good day. So look, there's still opportunities out there, but I just wouldn't get too carried away given the market's strong rally in 3 days, Harry.
All right, market's running hot. We're looking a bit toppy here. Thanks for joining us, James. It's been a pleasure.
Thanks, Harry.